Ladies and gentlemen, good day and welcome to the earnings call of National Aluminium Company Limited, NALCO, post-declaration of the financial results of quarter and 9 months ended December 2025, hosted by Systematics. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Shweta Dikshit from Systematics. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone. On behalf of Systematics Group, we welcome you to the 3Q FY26 and 9 months FY26 earnings conference call of National Aluminium Company Limited. I would like to thank the management for giving us the opportunity to host this call. I now hand over to Mr. Bharat Sahu, Company Secretary, NALCO, to discuss the company's financial and operational performance for the third quarter and 9 months FY26. Over to you, sir.
Thank you, ma'am. Namaskar. Good evening. Warm greetings from National Aluminium Company Limited, Navratna CPSE, under the Ministry of Mines. I take pleasure in introducing the NALCO team in today's post-earning call. The team is headed by Sri Brijendra Pratap Singh, Chairman cum Managing Director, Sri P.K. Sharma, Director Production, Dr. Tapas Kumar Patnaik, Director HR, Sri Abhay Kumar Behuria, Director Finance, and Sri A.K. Singh, our newly inducted Director Commercial. Today, NALCO registered a landmark result for the quarter and 9 months ended December 2025 after the board took note of the results in the board meeting held today. A presentation in this regard is already uploaded in the website and also in the stock exchanges, NSE and BSE. And now I will request our CMD sir to kindly highlight the results and the outlook of the company in the coming days. Over to you, sir.
Good evening. Good evening to all. Today we have declared our results, Q3 and up to Q3 results. As far as our performance, physical and financial performance, both we have recorded best ever physical performance in Q3 and also up to Q3, and also best ever financial performance up to Q3 and also physical performance. If we see the growth as compared to 24-25, the growth which we have recorded up to Q3, that is 9 months, 24-25, if we compare with this year 25-26 9 months. Income side, we have a growth of 13%, and expenditure, in spite of our increase in income by 13%, our expenditure has increased by only 6%. EBITDA margin has increased by around 20%, and PBT has increased by 25%. This is the 9-month comparison. Volumes of production has increased by 20% in alumina and metal by 3.5%, and sales of alumina has increased by 45% and metal by around 5%. This is the first 9 months performance. If we see quarter to quarter performance, our volume has increased by around 4 to 5% in terms of hydrate production, metal production, and our metals, our alumina sales and metal sales has also increased by around 20% and 5%. So there has been a strong both physical and financial performance, and main reason of this physical and financial performance has been the increase in the volume of production. We have increased the volumes of production. If we see the increase in the revenues, our revenues has increased by around 2,000 crores, 9 months revenue as compared to previous 9 months last year. And out of that 2,000 crores, the contribution of alumina is around 1,600 crores and metal around 410 crores. Price has a negative impact of around 871 crores, where alumina prices fell by from around $562 to around $385 this year average, and there was a negative impact of 1,652 crores. But metal prices have increased, which has given us a positive impact of 781 crores, that is increased from $2,538 to $2,867. So we have increased our revenues, and our expenditure has not increased that much, and that has increased by only 500 crores. That is, this is the 9-month figure total. and we have saved in power and fuel. The power which we imported last year was on the lower side. The saving in the power and fuel was around 142 crores. Employee cost has also gone down by around 118 crores. So the performance, 9-month performance has been very good. And quarter if we compare the quarter results, Q3, this year Q3 and last year Q3, if we compare, the income has increased by around 200 crores, and the expenditure has not increased that much, only around 60-70 crores expenditure increase has been there, and the profitability has increased from 2121 to 2131. That is the PAT. So, and the main contribution and the contributing factor has the increase in the volume of production. In spite of reduction in the prices of alumina, our profitability we were able to maintain because of increase in volume and better efficiencies, that is the improvement in techno-economic factors, that is caustic soda consumption, CP coke consumption. Of course, some techno-economics were not very good, but these two major techno-economics have been there. So we are working on that, and further we are working on increasing the volumes of production, maximizing our efficiencies, which is in our hand, and operating the plant in a proper manner so as to maximize our profitability. Thank you.
Ma'am, we may now invite questions from our esteemed participants.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touch tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Amit Lahoti from MK. Please go ahead.
Thanks for the opportunity and congratulations on a good set of numbers. My first question is on alumina contract. Operator, your line is echoing. Can you please check?
Sure, sir. Just a minute. Management, I think there is an echoance from your end. Could you please check?
In fact, we have mute ourselves.
Mr. Amit, you can please go ahead.
Sure. My first question is on alumina contract. In Q3, how much alumina shipments were linked to LME and how much were spot sales? And what is the spot versus contract mix in Q4?
Okay, that is the only question. Some other question?
So that was the first question.
Okay. You want me to answer it?
Yes, please.
Q3, each month we have done around 4 shipments, all the months. And we had 3 shipments in spot and 1 shipment in LME in Q3.
Okay, and all were of same quantity?
Yes, 3 shipments. All shipments are of 30,000 tons. On an average, we do 4 shipments per month. We have done almost on an average 4 shipments. And out of which one was on term basis, that was on basis of LME, and all rest of the 3 were spot.
And for Q4, is it going to be the same mix, 75-25?
Almost same mix. 1 shipment we have for LME, and the rest is for spot.
Right. And as a follow-up to this, have we started signing long-term contracts for the new refineries?
New refinery, we will be starting the commissioning process in June, and taking around 2-3 months to finally 3-4 months to stabilize it. We are expecting that around 3 lakh tons of alumina will be producing from this year onwards. So we are trying to have some long-term contract, 1 year or maybe 2 years. We'll be going in Philippines, some interested parties are also there. Middle East, some parties have approached us for long-term contract, that is 1 year, 2 year, 3 year. We will be floating some tenders. If we get better offers, we will be going for it. It totally depends on what offer we are getting.
Right, got it. And my second question is on critical minerals. There were some news articles indicating that we are looking to extract critical minerals from alumina red mud that we end up producing. So what is the plan there? If you could indicate any sort of timelines for feasibility of this project?
As far as extraction of critical minerals from red mud is concerned, we are in the process of we are having an MOU with NML Jamshedpur, where they are in the process of setting up a pilot facilities for making the methodologies for extraction of rare earth from the critical minerals. Already they will be taking around 1.5 to 2 years to set up this whole technology. Another is we have one party from Chennai in which we have done the MOU. They have set up their reactor in our mines, and they have taken some of the samples of red mud. They are into the process. Already they are doing some experiments and all that, but results have not come till now. They will be extracting some critical minerals. The third is that is not from red mud, that is from Bear's liquid. We are having one MOU with Bark, where they are setting up pilot plant, that is extraction of gallium from the Bear's liquid. These are the 3 projects which we are taking, but as of now, on commercial scale, we don't have any results. It's on the pilot scale. It will take around 1.5 years to set up and get some results for the commercial scale extraction.
Right. Okay. Fine. Thank you so much.
Thank you. The next question is from the line of Aditya Velkar from Axis Securities. Please go ahead.
Yeah, thank you for this opportunity. So my question is with respect to our alumina sales volume. So in the last call, we have said that for full year fiscal 26, we will achieve 1300 KT. And so far in the 9 months, we are already at 1100. So are we going to raise this guidance of sales volume for alumina? In Q3, we have seen a very good jump in alumina sales.
In the Q3, the sales was better, and our target of around maybe 12,50,000 or 13 lakh, whatever we are targeting. But this month, January, it has affected. There is a tension in Middle East, which is affecting our exports to Middle East. But this month, January, it was on slightly lower side. But February and March, we will be trying to make up those losses that we have done. But as per plan, maybe 12,50,000 or 13 we will be able to reach.
Okay, understood. And the second question is with respect to the chemical, means alumina division profitability. Means we have seen a drop in that. One part may be because of the fall in the alumina prices. But is there any, apart from the decline in alumina sales realization, is there any inflation from the cost side, especially with respect to caustic soda, which has led to the drop in the EBITDA per ton for the chemicals division?
As far as alumina sales are concerned and the margins from alumina is concerned, of course, there has been reduction in the sales prices from around $580. It's gone down to around $380. First 9 months if we compare. Caustic soda, we have improved on caustic soda consumption. The specific consumption caustic soda, which last year which was around 121 kg, has come down to around 99 kg. There we have got a saving. Of course, the prices have increased from around 39 to I think 45. 45. The impact is around 82 crore negative. 82 crore negative. But overall impact is not there because there is a saving in 129 crore efficiency. So because we have saved on the efficiency, we have improved our performance. There is a saving of around 129 crore on caustic soda. That is the thing which we have negated the increase in the prices by reducing our consumption. But of course, the prices of alumina, which has gone down, that is only affecting us.
Understood, sir. Yes. That's it from. I'll get back in the queue. Thank you.
Thank you. The next question is from the line of Pinakin from HSBC. Please go ahead.
Yeah, thank you very much, sir. Many congratulations for what is a record quarter, and it looks like this records will continue given where LM prices are. So my first question is, what would be the blended alumina realization for the company? If we just do the math of segment revenue divided by production volume, it comes to around 28,864. Would that broadly be correct?
You are talking about realization?
Yes, sir.
Alumina realization. Yes, realization, whatever we'll be getting, that will be somewhere around $320 or $310 average in Q4.
And at this point of time, sir, it looks like should be the realization trend which will continue in fourth quarter as well?
So similar will be continuing in the fourth quarter. We are expecting not more than $310 or $320.
Understood. And sir, what is aluminum cost of production this quarter, and how did it change versus the September quarter?
Our alumina cost, if we take calcined alumina.
Aluminium.
You are talking about aluminium or alumina?
Aluminium, sir.
Alumina. Our cost range 150 to 160. And in between that 10,000 range, somewhere it is 155, 156, somewhere it is 153. And the average cost is coming around within that range only.
Understood. And sir, what is the outlook for cost? Do you expect that to remain stable or move lower?
Q4 our cost will increase slightly because our CT page, our CP coke cost has gone up. Caustic soda costs have whatever we have tendered and ordered in December, but costs have gone up. So Q4 cost will slightly go up. Still to calculate, it will overall depend on the efficiencies and our specific consumptions. But the prices have been around, I think, 7,000-8,000.
Which one?
CP coke.
Though there is a negative impact on price because we are going to bear that burden, we are improving our economic front also to take care of that additional cost which will be coming in the fourth quarter through increase in price of input prices. So there will be not much impact on our total costs.
Understood. And my last question is, there is a meaningful decline in employee cost on a quarter-on-quarter basis. What drove it? And when would you need to start making provisions for the next series of wage hikes?
There are two aspects for this cost reduction. If you compare with the CPLO of last year, corresponding period of last year around 300 numbers of employees have been superannuated, and the recruitment of this year is not commensurate with that return. So that is one of the advantages. Second, we have made some accounting provision towards our PRP, which is not required now because we have calculated actual calculation, and whatever excess provision we have made, we have withdrawn this quarter. This is quarter 3. There is also around 50 crore that is impact. Okay, another 118 crore is total reduction of employee cost. If you compare with the corresponding period of last year, 50 crore on account of that is accounting provision, and another because of reduction in the manpower real cost, but that is superannuation of the manpower.
Got it. And sir, about the provisions that you will need to make for the next wage bill, when should we expect? June 26th quarter or later?
That is for ours. I think it will be from 1st January 27. Then we'll make it because this is the 26th. This year we don't require because our price pay revision due on 1st January 2027.
Got it. Thank you very much, sir.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock. Please go ahead.
Yeah, good evening, sir, and congratulations on the good results. So the first question was, clarification on the aluminium COP. So this, figure of 152 to 160,000. So this is on an integrated basis, right, with captive alumina. Just to clarify that.
Pardon?
Yes. This is on the captive alumina. Whatever alumina prices we are manufacturing cost.
We are transferring the alumina to our smelter plant on cost.
On cost. Okay. And the second one was on, how has been the trend of domestic, premiums. I think we sell most of our aluminum in the domestic market. So how has the movement in physical premiums been, on the third quarter?
The premiums actually totally depends on the LME. This year, last year our average LME was around 2500, but this year average LME we are getting is around 28, more than 28. So there has been a $300 around 300 to $340 increase in the LME, which is giving us a better premium. But as far as the premium from ingot to wire rod is concerned, last year we were getting better. Ingot to wire rod premium last year was around 10,000. So we are getting around 6,000 to 7,000 only. So overall there is increase in LME. So that is giving us a better premium.
So what is the right way to look at this? Is it like linked to the MJP, or is it like a percentage of the LME, or is it on a per ton basis? What is the right way to look at the premiums?
The right way to look at it is on the basis of LME, because our all pricing, whatever we are doing is on the basis of LME.
Sure, sir.
On the basis of whatever MJP is there, sometimes we have to give some discounts and all that, depending on the MJP.
We have a pricing policy where we take LME as a base and we add premium as per your version. We take sometimes MGP premium. Then there is some modalities, fixation price. All factors is being taken care of while we do price. Our pricing mechanism every 3 days, if the LME prices crosses some limit, we do. So that is a transparency policy we have. We are adopting that.
Okay, and probably the import duty also of 7%.
I think that is a part of our policy. That policy guideline is there. We follow by that. We go by that only.
Okay, sure, sir. Also, sir, can we look at any more savings on power and fuel, for the fourth quarter, or captive coal now you fully reached the 4 million ton of captive coal production?
Production already we have targeted 4 million ton, which will be reaching. We are going by that rate, and that is as compared to last year. The savings will be there. The reduction in the procurement of coal from e-auction and the linkage coal, there will be reduction. And we are looking after that up to Q3, the saving has been around maybe 30 crores or something like that. Q4 also some saving will be there, because the effect is going down because the prices of linkage coal has also come down. And the difference at present, if you see the price difference between linkage coal and our captive coal is around 200 to 200 rupees, to 250 rupees per ton.
After withdrawal of that GST compensation cess, there is 400 rupees per ton, which is not being paid on the linkage coal. So our difference between the captive coal and FSA coal, in such an agreement, is around 300 to 300 rupees.
Sure, sir. Okay. Yeah. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rajesh Bhandari from Nakoda Engineers. Please go ahead. So Rajesh, kindly unmute your mic.
Can you hear me now?
Yes.
Yes, we can
Yeah.
hear you, sir.
Sir, congratulations for good numbers. Sir, you just now mentioned about the coal mining. So when we are having our own mines, when we are mining from our own mines, is that cheaper, or taking from outside is cheaper?
Our own captive mines, the landed cost at our power plant, the difference between that coal and the coal which we are taking from outside is around rupees 200 to 250 rupees, depending on the source.
Which one is higher, sir? Which one is higher?
The coal which we are taking from outside. Our captive coal is cheaper, around 200 rupees.
Then why can't we have our own mines, sir?
We are already having all mines, and that the rated capacity of the mines is 4 million ton. So we are ramping the production of that mines up to 4 million ton this year. And we are in the process, maybe some more mines in the coming times when we are going for expansion. We will be.
Oh, yeah. That's what I meant. Yeah. Okay. Sir, you said about red mud, some critical minerals. That is right. And do we have any plan for new mining for the critical minerals, new mines?
New mines for the critical mineral, whatever there is, that is one JV company, Kabil is there, JV of OHCL and MECL, which is having 5 mines in Argentina. They have done non-invasive exploration. Now invasive exploration is going on. Maybe it will take 1.5 years to get the results of this exploration, and we'll come to know the amount of lithium. That is a lithium mine. Lithium, what level of commercial mining will be able to do. Already mining exploration.
There we will have our partnership.
Yes. NALCO is around 40%.
Okay.
HCL and MECL is 30%.
Sir, अभी आपने जैसे बोला alumina prices had gone down. When aluminium prices are high, why should alumina price go down, sir?
You see, there is an excess of alumina in the market. In Indonesia, 2 refineries have come up, and few closed down. Like one Mozal one closed down, Iceland one smelter. The smelting capacity has gone down, and refining capacity has come up more. So there is an excess of alumina in the market. That's why there is the price reduction, and the prices of alumina solely depend on demand supply.
Yeah, correct, sir. And this is going to remain forever?
Yes. I don't know forever, but this year it's going to remain. If the smelting capacity is somewhere, but in of course Thailand, in Indonesia, the smelting capacity is supposed to come up maybe next year. It will stabilize. That may be some reduction in. They are now presently having excess of alumina, so some thing will be taken care. But now, as of now, this year the visibility is not there. The similar kind of prices will be there.
Another main reason is, in addition to CMD sir, China, their capacity building is around 60 million plus. Because they are now capping the capacity 45. That is one of the reasons. When they will increase their production, it will automatically go up also. That
China is also having the excess of alumina.
जी. तो अपन अपना मेटल का कैपेसिटी क्यों नहीं बढ़ा रहे हैं, सर?
Already we are into process of it. We are already in the process of appointing one consultant for making DPR, and our roadmap is maybe this year, by maybe this year, June, July, August, we'll be finalizing the DPR. After that, maybe 36 months, we have made our roadmap, and maybe by end of December 30 or maybe early first half of 2031, we have to add another 0.5 million ton capacity, smelting capacity. That is the roadmap, and we are going ahead with it very aggressively.
Sir, one last question. Why the finance cost? Sir, only one question. Finance cost, why it has gone up so high, sir?
Which one?
Finance cost.
Finance cost.
I think
No, that is not the finance cost. Actually, that is the one thing we have made some settlement this quarter. That is the arbitration settlement. Okay. The interest component was there as per Ind AS. The interest component of the settlement will be put under finance cost. Because really accounting adjustment only, okay?
Right. Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Manav from Yes Securities Limited. Please go ahead.
Yes, hi. A very good evening, and thank you so much for the opportunity. So first of all, congratulations on the result. And my first question is, so if we take a look at slide 9, where the company has mentioned the LME price trend, I just wanted to, get an outlook, because it's mentioned that LME prices are expected to average around $26.70 for aluminium for this particular year. So what's the management's view on the aluminium pricing trend going ahead?
You see, as of now, the LME is somewhere around $32,100. We were expecting to remain somewhere around 29,000-3000, but it has increased. And the main reason which we are seeing is some reduction in supply, some smelters closing down, capacities of China's capacity cap and all that. So there is of course, demand supply issue. So we are expecting this year, maybe this quarter, will be somewhere around 3,000. It should remain 3,000 LME. And next year also somewhere in between 29, 3,000, 28, 29. Average 29, we can expect that. But obviously it will be more than 26.
Got got it. Yeah, sure. Thank you so much. And second question is, on the caustic soda, we have had savings of around about 129 crores. Could you give what was the landed costing for caustic soda on a per ton basis? You mentioned 45,000, right?
Landed cost of caustic soda was in the 9-month average, if you see 25-26, it was around 42,000. Okay. For the next quarter, we have the cost will go up to 45,000. Fourth quarter of this year.
Got it. Sure. Thank you so much, sir. I'll go back to you.
Thank you. The next question is from the line of Pratik Kothari from CR Kothari and Sons. Please go ahead. So Pratik, kindly unmute your mic. As there is no response, we'll move ahead. The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Good evening, sir, and thank you for taking my question. Sir, my first question pertains to our alumina input to aluminum output ratio. Has it changed? Because if I just calculate 2 ton of alumina per ton of aluminium, so we have sold almost 85 KT higher than what would have been the residue left after the aluminum production. So could you just give us some insight into it?
You see, our volumes of production of alumina has been on the higher side. Volumes of alumina, that's why we have increased our alumina export. And aluminium, whatever aluminium we are making, around 2 tons of alumina is required, 1 ton of alumina, per ton of aluminium. So as per requirement, assigned to the smelter. So whatever exports we are doing is because of the excess in the production and the volume of the alumina.
So it is still 2 ton of alumina for per ton of aluminium, right?
Yes. 1.92. Around
1.93.
1.93.
Noted, sir, because there was some additional 80 KT you have sold it over. If you would have used this ratio, fine.
Actually, what is happening is we have a storage capacity of around 75,000 ton in Vizag, around 45,000 tons in our refineries, and around 1 lakh tons in our smelters. So the storage capacity is what storage we have, that keeps on changing. So that determines the overall ratio. That is very important to see what was the storage capacity at the beginning of the year and what is the storage now. Okay.
So can I assume that we have depleted our storage capacity to a larger extent, because there's 50 to 80 KT additional, which would have come from there itself?
No. That storage capacity, almost whatever we had in the beginning of year, our stocks of alumina in the smelter, of course, in the beginning of year, the stock was somewhere around 15 days. Now we are nearing around 10 to 12 days, 2-3 days lesser stock in smelter is there. But as far as our Damanjodi, all the silos are full. Vizag also, our stock is around 60,000, 65,000. That is the average we maintain in the Vizag. Only Damanjodi, in our smelter, around 2-3 days stock means that will be maybe around 7,000 to 8,000. Now, 7,000 to 8,000. 8 to 10,000 stock has depleted.
Noted, sir. So my second question pertains to basically just clarification on the statement which we have made, that from the new alumina refinery, we said we are expecting 3 lakh kind of the production next year. In our previous call, we were talking about roughly about 5 lakh.
Yes. Previously, we were telling.
Has anything changed or timeline, or it has been delayed something?
We will be starting the commissioning. The total refinery capacity is around 10 lakhs. So since we will be starting the commissioning in June, but it takes 2-3 months to complete the commissioning process, stabilize the production. Maybe after June, September, October, we will be having maybe going to 60% level of the total rated capacity, and full capacity will be going to by around December.
So that's why we are taking a more realistic figure of 3 lakhs. We can have somewhere in between 3 to 5 lakhs. But to be more realistic, it will be around maybe 3 lakhs.
Noted. And sir, lastly, on our overall CapEx for this year and next year, and also what kind of employee cost addition we are expecting from next year due to wage revision? Any provision which we have started to make or we will make in 4Q?
This year we are not having any wage revision. Whatever wage revision will happen 27 onwards. The employee cost will be almost same this year also. Slightly reduction will be there due to retirement. We will be having around 200 to 250 superannuations, and whatever superannuations are happening within the senior category people. So of course there will be again reduction of around maybe 100 crores or maybe 70-80 crores of reduction in employee cost if we see 9 months or 12 months figure. There will be not any increase in due to wage revision impact that will come from next year onwards.
Yeah, so on the next year only, what kind of wage revision or just can tell me what is the percentage of last time you have given the hike, and is that hike has something to do with your profitability levels as well? If you have a higher profitability, so probably a higher wage hike you have to give, or it is non-impacted by the profitability?
Our wage revision is due from CPSC. It is from 1st January 2027 onwards. Okay. So the next fiscal 26-27, the impact will be of 3 months. We will be making provision of some guidelines when the government of India will form a committee for finalization of this wage agreement. Then we will make some ad hoc provision for 3 months only. But that provision will not be enough because our retirement and superannuation for 26-27 will be to a great extent, and the high wage people will be retired and the induction will be at the lower level. So the overall there will be no increase in the employee cost.
Noted, sir. And sir, CapEx figure for this year and next year, if any?
CapEx this year will be around 1,700. This financial year what we are expecting is finishing with 1,700, and next year we are targeting around 2,000 crores, 1,800 to 2,000 crores next year. But 27 onwards, from next financial year onwards, it will increase.
Yeah, on the new smelting facilities.
As is this year, now we do the ordering and all that by next year, April, May. So 27, 28, that will increase.
Noted, sir. Thank you, sir, and all the best for future.
Thank you. The next question is from the line of Rajesh Majumdar from 360 ONE Capital. Please go ahead.
Good evening, sir, and congratulations on a very good achievement. Sir, my first question was, if you look at the alumina sales and if you extrapolate the revenue, the average realization for the quarter comes out to be about $380. And that you are saying for fourth quarter will become between 310 to 320. Is that correct?
Fourth quarter will be average 320.
And this quarter is 380.
No, that was first 9 months was 380. Q3, if you see, it was 349. Q3 was 349. 380 was for 9 months.
Okay, 350. Okay, right. And what was the average exchange rate for the quarter?
Q3 exchange rate.
Yeah.
Q3 exchange rate was average 87. No, sorry, 9 months it was 87, Q3 89.
Okay. So my second question is on the power and fuel. We've seen a reduction this quarter, which will normalize or which will be remain like what you envisage is the annual power and fuel cost now that we are getting the coal from our blocks. What should the annual cost of power and fuel stabilize at?
The coming quarter, I think the fourth quarter, the power and fuel cost will be less than the third quarter, because third quarter there is some problem. We have imported some power, so that has added a cost. But that will not happen in the next quarter because all our boiler and is in the good shape, and we will be managing maximum power through our internal generation only. So our import of grid will be lesser.
So third quarter itself there is a fall of 70 crores. You are seeing a further fall on that.
Pardon?
third quarter itself is a fall of about 70 crores from 2Q. You're saying further fall on that.
Q2, there is a reduction in 70 crores, is saying.
Q2 to Q3 of current fiscal compared to last year.
Yeah, Q3 over Q2, last Q2.
Last Q2, because our internal captive, that is one reason is there, because the Q3, there is no impact of that cess, 400 rupees coal cess, GST compensation cess. It has been withdrawn. Okay. That benefit we have got in the third quarter, because the withdrawn is July, September onwards, but that benefit in the third quarter we have got, because both in the, that is linkage coal. That is one of the major reasons.
Right. And why is there a sharp jump in the operating expenses from 600 crores to 725 crores? And how should we look at this going forward?
Operating expenses, if you see, that is increasing because increase in the volumes. No. When the volumes are increasing, there will be increase in the consumption of raw material and all that. Just because of the increase in volumes, the operating expenditure has increased.
But if you compare with the revenue, the jump is not in that extent, because revenue has increased 13%, our cost as expenditure is only 6% in totality. So operating costs, when you are increasing your volume, raw material consumption, other direct variable cost will automatically increase.
You see, last year our alumina production was 20,50,000. This year our average alumina production rate is going to around 22,50,000. Maybe we will be reaching 23 lakhs. We will be doing around 2.5 lakhs more alumina this year. So, of course, the raw material consumption and all that increases. Even metal production also will be around 10 to 12,000 more as compared to last year.
And what is the LME premium, my last question, that you have got this year, this quarter on the metal?
This quarter, LME means Q3 you are telling?
Q3, yeah.
Q3 average LME was around 28. 28, yes. Around 28 average. Premium you are telling?
Premium.
Premium we don't revise regularly because we have a pricing policy. We fix the premium ones, and that is inbuilt in our pricing policy itself. So we don't regularly revise that premium.
We fix it for 6 months. So once
so there is a policy mechanism. If you
go premium, अभी हमारा current premium कितना है? I think it is 60. It is around 50.
August में $60.
So last quarter में premium which we have got is around $60.
That is being part of our pricing policy.
That is part of pricing.
Thank you.
Thank you. The next question is from the line of Sumangal from Kotak Securities. Please go ahead.
Yeah, good evening. Thanks for the chance. So first question is on alumina division. You said one shipment is sold, prices are fixed on LME. So this is this as a percentage of aluminium LME we are selling alumina, or this is the Australia alumina FOB price index we are talking about?
LME. Whatever LME along with one shipment which we are doing, that is percentage of LME. Some shipments are on around 12%, some is around 11.5%. Depend on the whatever tender prices we are getting.
Understood. And for FY27, also it is same ratio?
Yes, it's almost same. Whatever now term tender we are going, it is going on the lower side because LME is increasing. LME is going to around 32, 33. It has gone maybe 30, more than 3,000. So the percentage is going down.
No, also for the LME linked volume, we are selling in the same proportion, 1/4 on LME linked and...
It's almost average. One shipment we try to do on term and rest on the shipment on spot.
Understood. Sir, we have also started selling in the domestic market. So what is the realization difference between domestic and exports in alumina division?
Realization, if you see domestic and export, is almost same, not more. The difference.
No, there is a difference, hardly any difference of 1,000-2,000 because of addition of that export incentive that we added. The export price, we added some additional incentive which we would have got had this quantity exported. So the price difference is not much. There is around 2,000.
1,500.
Understood. And sir, when we are targeting 1.3 million tons volume for this year, we've sold 1.1 so far. So fourth quarter would be just 200,000 tons, right? Or we can actually destock more.
No. That will be around whatever we have planned, not more than that. Around maybe 12.5 to 13. It totally depend on whatever the requirements are there, because the disturbance in the Middle East that has affected our ports to Middle East in the month of January. We could do only 2 shipments. We are trying to increase the shipment in February and March, make up that. It will totally depend on how the conditions are there in the Middle East.
Understood. And sir, with respect to aluminium division, can we practically sell or produce more than 470,000 tons? Can we operate at more than 100% utilization?
You see, our rated capacity is 460, and we are going for 470 now. 472, in fact, this year we are trying to reach 472. One area where we are exploring is getting some scraps. If we get some good quality scrap, because our hot metal production capacity is 470, but our casting capacity is more. We have got additional maybe 50,000 1 lakh tons of casting capacity. So we can easily increase the cast metal production capacity if we get good quality scrap. We are trying to source the scrap, but now we are not able to get good quality scrap. That's why if we get good quality, maybe 10,000, 20,000 tons of scrap, we will be able to increase our cast metal production capacity.
Understood. Sir, on the aluminium division, few companies are betting volumes on forward basis. Are we doing anything of that sort, or everything is open to spot prices?
Hedging. You are talking about hedging?
Yeah. Forward sales.
No, we have not adopted a hedging mechanism now, because we don't think our model of business, if you see, and alumina and metal, both. So this hedging, we don't feel this is required now, but we don't have any commitment. Our balance sheet is so strong. We don't have any cash flow commitment. So if the situation comes up to 27, 28, when our capex plan will be in full swing, and we have committed cash flow, and we need to protect our EBITDA and margin, then we will think of this hedging. Till now, we have not gone to that periphery.
Understood. And sir, with respect to aluminium division, what is the dependence on grid for power requirement? What is the percentage, and is it changing over the last few years?
Very less. Power very less. Whatever power we require, around 800 megawatt, that we are totally taking from our own captive source. Sometimes, in case of some very less breakdowns, only we depend on the grid. Almost 96 to 97% of our power. 100 million units are quarter-wise you can take.
So how much? Sorry, 10%.
I think no, not 10%. I think it must be less than 5%.
Actual till date up to 9 months, we have imported 90 million units.
Only 90 million.
90, 100 के आसपास.
Okay. And sir, with respect to carbon,
whereas we have generated around 5,773 million units.
Not less than 5%, 2%.
20 million, 100 million you said. Okay. Sir, just one or two more questions. With respect to the carbon cost, CT coke, CT pitch, etc., what is the inflation we are seeing, and when is it likely to hit?
Price?
CP coke price.
CP coke and CT pitch. CP coke price, we are expecting that to fourth quarter it will be around 2,000 more. But we have in the last 9 month average, it is around 52,000. It will be around 54 in the next quarter, the fourth quarter. That is the increase. And CT pitch and CP coke, there will be CP coke, there is a huge increase, 12,000. But CT pitch, there is an increase of 51 to 52,000. Here CP coke 43 to 54. We are expecting
there is an increase.
Okay, so roughly 20%.
Yes,
5% here.
Yes, 20%, more than 20% CPCO.
Okay.
Our average price was 42,764, and we are expecting in the new contract it is around 54,600. So there is a huge jump at that 12,000 around.
And when is this getting reflected from fourth quarter?
Yes. Before it will be reflected.
Is this an annual contract or is it quarterly or monthly?
6 months.
We do for 6 months. So this is coming from this contract is from January to June.
Got it. And just one last question on CapEx. You said around 1,800 to 2,000 crore this year. Is it possible to split how much you are spending on maintenance and how much on the refinery? And then how much is left on refineries?
Refinery we have planned in the you are talking about the next fiscal 26-27.
So this year you said around 2,000 crores, right?
This year
is 1,700. 25-26 around 1,700 capex, and I think
27-28
600 to 700 is MR. That is addition, modification, and replacement project, and the rest is bigger projects.
So 1,000 is growth and 700 is 600 is MR.
You can see it in that way.
Okay. And sir, in this refinery 1 million ton, how much will be left, which will be spent in FY26-27?
Till date we have already spent 5,000 rupee, 5,000 crore, and I think next year it will be around 500 crore. 500 to 600 crore.
Got it. And just if I may ask one more question, sir, we are doing some JV on caustic soda. Is that production producing, and are we getting any cost benefit, or the profits are getting factored in?
We are not getting any benefit because we are getting a raw material security. Because we have a agreement with them, joint venture agreement, and we will be procuring 1.5 lakhs. From them are the price which will be discovered through tender. Whatever price will be rest of will be there. Now we are going to review that pricing policy and we'll how it works.
Actually, what is happening, since we have a assured quantity of 1,50,000 from there, if that quantity is not available, there will be a deficiency in the market and the other suppliers will increase their prices. So this JV goes in a long run, just curtailing the increase in the prices.
Understood. Got it, sir. Thank you so much and all the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you, Team Chorus. On behalf of NALCO, I thank all the esteemed participants who took out their valuable time and participated in this conference call. This shows your keen interest in the business activities of this Navratna CPSE NALCO. Thank you, Team Chorus, for facilitating this post-earning call for Q3 results of NALCO. We are also thankful to Team Systematic for hosting the earning call on quarter-on-quarter basis, and we solicit your cooperation in future also on a continued basis. Thank you all, and we look forward to similar cooperation in the future as well. Thank you.
Thank you. On behalf of NALCO, we conclude this earning call. Thank you for joining us. You may now disconnect your lines.